Hello my students, from the previous videos, students also know the general knowledge of the logistics industry. If the students have not seen it, please immediately click on the right corner to review the previous videos. And now let's start with the first lesson and also one of the cornerstones of the logistics industry, it's Incoterms. Incoterms is an acronym for the English phrase, International Commerce Terms, published by the International Chamber of Commerce, ICC. This is a set of international trade rules that regulate the responsibilities of the parties in a foreign trade contract. Incoterms are international trade terms that are standardized, and are widely recognized and used by many countries and territories around the world. The transactions that the Incoterms refer to must be on the scope of international trade, not domestic transactions. This is also the reason why Incoterms have certain impacts on import and export activities. Up to now, there have been 9 changes of Incoterms: Incoterms 1936, Incoterms 1953, Incoterms 1953, First Amendment in 1967, Incoterms 1953, Second Amendment in 1976. Starting from the period of Incoterms 1980, a new version will be revised and released every 10 years, such as Incoterms 1990, Incoterms 2000, Incoterms 2010, and the latest version today is Incoterms 2020. There are 2 important points you need to remember in the content of these terms. Where is the responsibility of the buyer and the seller? Transfer point of responsibility, cost, risk from seller to buyer. After understanding the basic concepts of Incoterms, let's start learning how to use it. Plus, since Incoterms are commercial practices, they are not mandatory. Only when the parties to the contract stipulate the use in the sale of goods contract will it become a mandatory condition, binding the obligations and responsibilities of the parties to the contract. Plus, the later versions do not negate the validity of the previous versions. Therefore, when using, it is necessary to specify which version of Incoterms is applied for comparison, to determine the responsibilities of the parties. Incoterms only explain the most general matters relating to delivery, such as who is obligated to hire the means of transport or to take out insurance, when the seller delivers the goods to the buyer, and how to divide the costs between them. How are the parties? However, other issues such as prices, payment methods, loading, unloading and unloading of goods, storage and warehousing, depend on the agreement of the parties expressed in the contract or according to the customs of the port, business lines and customs of the host country of the parties to the purchase and sale. Plus, the 2 buying and selling parties can increase or decrease their responsibilities and obligations for each other depending on their strong, weak positions in the transaction, but they must not change the nature of the delivery conditions. The increase or decrease of responsibilities and obligations, if any, need to be specified in the sales contract. Plus, Incoterms only determine the time when the risk of goods passes from the buyer to the seller, not the time of transfer of ownership of the goods, as well as the consequences of a breach of contract. These matters are often covered by other provisions of the contract or in the law governing the contract. More specifically, let's dive into the latest 2020 release. In order to help students easily remember the 11 terms of the Incoterm, I will divide them into 4 groups, increasing according to the level of responsibility and costs that the seller will have to bear. Students, remember to record this mantra: 1E3F to 4C3D. The first is Group E. There is only one clause in this group, that is, EXW conditions, or X-works, delivery at the factory use case. This condition is used when the seller wants to export but cannot afford to do anything related to the shipments such as customs clearance, transportation, insurance. Due to lack of experience for export, it is recommended to sign a contract under EXW terms. EXW is an Incoterms term that prescribes the minimum liability of the seller. In this condition, the seller's responsibility will be: prepare the goods in accordance with the agreed contract, deliver the goods to the buyer at the seller's premises or at the specified place, help the buyer do the export procedures when required at the buyer's expense, if that is specified in the contract, deliver to the buyer the documents related to the goods, do not bear the cost of loading the goods on the means of transport nominated by the buyer unless otherwise specified in the contract of sale. Buyer responsibilities are: pay for goods according to the agreed contract, bear all costs and risks from the time of receipt of goods at the seller's premises, cost of goods inspection, costs of paperwork, procedures for receiving goods and export clearance, costs of insurance, costs that the seller has spent to support himself, carry out procedures and bear the costs to carry out customs clearance for export, transit, and import of goods. Risk is transferred when delivery occurs, when the goods are placed at the disposal of the buyer, and not yet loaded on the vehicle. The loading of goods onto the means of transport, from the seller's workshop to the port, is not the responsibility of the seller. If the seller does this, the costs and risks will still be borne by the buyer. The seller will assist the buyer in carrying out export procedures for the goods, if required. Therefore, buyers should not use this clause when they cannot directly or indirectly clear customs for goods in the exporting country. EXW is used with all modes of transport. Next, coming to 3 conditions F. The first is FCA conditions, or free carrier, delivered to the carrier use case. This condition applies if the seller has the ability to carry out export customs procedures. For convenience, the seller should accept this work at his own expense, which is export tax, and request contract under FCA terms. The seller usually estimates the payable export tax in advance and calculates it into the amount receivable from the buyer. In this condition, the seller's responsibilities are as follows. The seller must deliver the goods with the commercial invoice and other documents specified in the contract. Support the buyer to get the transport document if the buyer requires. The cost is borne by the buyer. Take care of loading the goods onto the means of transport nominated by the buyer if the place of receipt is in the warehouse of the seller. If the destination is outside the seller's warehouse, the seller must arrange for the transportation of the goods to the point of delivery. Carry out export procedures for goods and bear all risks and costs related to this operation. If the buyer asks, the seller can hire a means of transport under the usual conditions, all costs borne by the buyer. Buyer's responsibility will be, the buyer must receive the goods from the seller within the specified time, transport and clear the goods for import. The buyer bears all risks of loss or damage from the time of receipt by his carrier. Pay the costs and bear the risk if the seller hires a means of transport. Customs clearance for import of goods. The point of transfer of risk occurs at any of the 2 locations above designated for delivery, that point determining where costs and risks are transferred to the buyer. FCA is used with all modes of transport. The second F condition is FAS conditions, or free alongside ship, delivery along the side of the ship, use in case. Conditions apply if the seller has the additional ability to take the goods to the jetty at the port of export. The seller should do this at his own expense and risk arising, calculating the costs in advance. This fee is included in the cost of goods and contract under FAS terms. Seller responsibilities are, deliver the goods alongside the designated carrier together with the commercial invoice and other documents specified in the contract. Inform the seller in advance of the possible delivery time. If the buyer requests, help the buyer get the necessary documents for the import, at the buyer's expense. Packing and marking, export clearance. Seller does not need to buy insurance. However, if the buyer requires information necessary to obtain insurance, the seller must, at its own risk and expense, provide such information to the buyer. Buyer responsibilities are, pay for goods according to the commercial invoice of the shipment. Hire a means of transport for international transport, inform the seller about the ship's information and the time of receipt of the goods. If the seller requests, help the seller with the necessary documents for export, at the seller's expense. Import clearance. Risk of loss of or damage to the goods is transferred when the goods are placed alongside the vessel, and the buyer bears all costs from that point on. FAS is used with ocean freight. The final condition in Group 3F is FOB conditions, or free on board, delivery on board use case. Conditions apply if the seller has the additional ability to take the goods to the jetty at the port of export. The seller should do this at his own expense and risk arising, calculating the costs in advance. This fee is included in the cost of goods and contract under FAS terms. Seller responsibilities are, transporting the goods on board the ship at the port of departure as stipulated by the 2 parties in the contract and bear all related risks. Apply for permits and carry out export procedures. Bear all risks of loss of or damage to the goods before they are safely placed on board the vessel. Inform the buyer that the goods have been on board. Deliver the documents specified in the contract to the buyer. Buyer responsibilities are, responsible for any damage or loss after the goods have been safely loaded on board the vessel. Bear all costs to hire means of transport and carry out import procedures. Inform the seller of the place, the vessel to receive the goods and the time when the goods are ready to receive the goods. Risk of loss of or damage to the goods is transferred when the goods are placed on board the vessel, and the buyer bears all costs from that point on. FOB is used with ocean freight. Next, let's learn about the 4C group. First is CFR, C and F, or cost and freight use case. If the seller has the ability to hire a ship, the seller should do this at his own expense to hire a ship to bring the goods to the port of import. Pre-calculate this cost in the cost of goods, no risk. Risks and contract under CFR terms. Seller responsibilities are, safe delivery of goods on the means of transport. Rent a ship to transport goods. Control the quality, quantity and weight of the goods before being delivered to the ship. Properly pack to ensure the safety of the goods during transportation. Send the original transport documents as well as the electronic copies to the port of destination to the buyer. Bear all costs and risks to provide information to the buyer to purchase cargo insurance. Buyer responsibilities. Receive goods according to the time and place specified by the two parties. Bear all risks with the goods when the ship has arrived at the port of destination. Do customs procedures to import goods. Inform the seller of the exact place of receipt in the port of destination and the time of receipt of the goods. Risk of loss of or damage to the goods passes when the goods are placed on board the ship, at which point the seller fulfills his obligation to deliver regardless of whether the goods arrive at the port of discharge in good condition. Good and complete condition or not. CFR is used with ocean freight. Next is CIF conditions, or cost, insurance and freight use case. If the seller has the ability to buy insurance for the shipment when the goods are transported on a ship, the seller should do this at his own expense to buy insurance, calculate this cost in advance to the goods, and sign the contract under CIF terms. Seller responsibilities include safe delivery of goods on the means of transport. Rent a ship to transport goods. Control the quality, quantity and weight of the goods before being delivered to the ship. Properly pack to ensure the safety of the goods during transportation. Send the original transport documents as well as the electronic copies to the port of destination to the buyer. Buy insurance for goods at the lowest rate. Type C. Buyer responsibilities include receive goods according to the time and place specified by the two parties. Bear all risks with the goods when the ship has arrived at the port of destination. Do customs procedures to import goods. Inform the seller of the exact place of receipt in the port of destination and the time of receipt of the goods. Risk of loss of or damage to the goods passes when the goods are placed on board the ship, at which point the seller fulfills his obligation to deliver regardless of whether the goods arrive at the port of discharge in good condition. Good and complete condition or not. CIF is used with ocean freight. Another condition in Group 4C is captain conditions, or carriage paid to use case. If the buyer wants to receive the goods under FCA terms but is unable to carry out the freight, he can negotiate and sign a contract under CPT terms. The seller usually anticipates the arising transportation costs and calculates it into the amount of goods receivable from the buyer. The seller's responsibility will be expenses for carrying out export procedures, the costs associated with bringing the goods to and delivering them to the first carrier, the costs of bringing the goods to the port of destination according to the signed contract of carriage, cost of transferring documents to the buyer, cost of transportation through transit countries according to the contract of carriage. Buyer responsibilities are the costs related to the goods, except for the costs of export clearance, to be borne by the seller, and the costs already included in the contract of carriage after the first carrier receives the goods. The cost of making goods at the port of destination and transporting them to the warehouse, local charges at the port of destination minus the costs paid by the seller to the carrier, expenses incurred due to the buyer's failure to promptly or accurately notify the seller of the time and place of receipt of the goods. Expenses related to inspection of goods prior to export, unless these procedures are borne by the competent authority of the exporting country. Once the goods are delivered to the carrier, the seller cannot guarantee that the goods will arrive at the destination in good condition and complete. The risk is transferred from the seller to the buyer when the goods are delivered to the buyer by handing over to the carrier. CPT is used with all modes of transport. Finally, the condition, CIP conditions, or carriage and insurance paid to, freight and insurance paid to use case. If the buyer wants to receive the goods as CPT, but also needs the seller to buy insurance for the shipment, then sign a contract with CIP. The seller buys insurance and bears the cost of insurance, but the buyer bears the risk of loss or damage of the shipment during transportation. Seller responsibilities include provide commercial invoices and other documents according to the contract. Responsible for transporting the goods safely to the first carrier at the agreed place at the agreed time, hire and contract transport to bring the goods to the port of destination according to the most convenient usual routes. Properly pack to ensure the safety of the goods during transportation. Do export procedures, provide information and documents for buyers to complete import procedures. Inform the buyer of the delivery of the goods to the carrier and provide proof of safe delivery to the carrier. Buy cargo insurance according to the highest level of a buyer. Responsibilities include responsible for all risks and losses occurring to the goods from the time the goods are delivered to the first carrier. Carrying out procedures for importing goods. Do customs procedures to import goods. Inform the seller of the exact place of receipt in the port of destination and the time of receipt of the goods. There is no obligation to make a contract of carriage or an insurance contract. Once the goods are delivered to the carrier, the seller cannot guarantee that the goods will arrive at the destination in good condition and complete. The risk is transferred from the seller to the buyer when the goods are delivered to the buyer by handing over to the carrier. CIP is used with all modes of transport. Now let's come to the last group, which is the one for which the seller will be responsible, with maximum costs and risks. The first condition in this group is DPU conditions, or delivery at place unloaded, delivered at the unloaded location use case. This term is often used when the buyer does not have the ability or experience to bring the goods to the import warehouse and also does not have the ability or experience to unload the goods from the incoming means of transport. The seller can do this extra work, pre-calculate this cost in the cost of goods, and contract under DPU terms. Seller responsibilities are: sign a contract of carriage to bring the goods to the specified destination. Packing and marking, tally of goods. Carrying out procedures for exporting goods. Deliver goods with commercial invoice and other documents specified in the contract at the specified place and time. Bear all risks and costs until the goods are delivered. Unload the goods from the means of transport at the place of delivery. Buyer responsibilities are: pay for goods according to the commercial invoice of the shipment. Inform the seller about the time and place where the goods are ready to receive. Do import procedures for the shipment. Receive goods at the place and time as the contract. Take all responsibility for the goods from the time of receipt. Buyers do not need to buy insurance. However, if the seller requires information necessary to procure insurance, it is at the buyer's risk and expense to provide such information to the seller. The seller bears all risks of loss of or damage to the goods in order to bring the goods to the named destination and unload. DPU is the only Incoterms term that requires the seller to unload the goods at destination. The seller bears the costs and risks of unloading. DPU is used with all modes of transport. Next is DAP conditions, or delivered at place use case. Conditions to be used if the buyer does not have the ability or experience to bring the goods to his/her importing country. The seller can do this extra work, calculate this cost in advance, and contract under DAP terms. Seller responsibilities: sign a contract of carriage to bring the goods to the specified destination. Packing and marking, tally of goods. Carrying out procedures for exporting goods. Deliver goods with commercial invoice and other documents specified in the contract at the specified place and time. Bear all risks and costs until the goods are delivered. Buyer responsibilities: pay for goods according to the commercial invoice of the shipment. Inform the seller about the time and place where the goods are ready to receive. Do import procedures for the shipment. Receive goods at the place and time as the contract. Take all responsibility for the goods from the time of receipt. Buyers do not need to buy insurance. However, if the seller requires information necessary to procure insurance, it is at the buyer's risk and expense to provide such information to the seller. The seller bears all risks to bring the goods to the named place of destination. The risk of loss of or damage to the shipment passes to the buyer at the point of delivery. DAP is used with all modes of transport. Finally, DDP conditions, or delivered duty paid. The use case of this condition is, if the buyer does not have the ability or experience to do import customs clearance for the shipment, the seller can do this additional work, pre-calculating the amount of import tax, pay this to the goods, and sign the contract under the terms of DDP. Seller responsibilities are: sign a contract of carriage to bring the goods to the specified destination. Packing and marking, tally of goods. Carrying out procedures for exporting goods. Carrying out procedures for importing goods. Deliver goods with commercial invoice and other documents specified in the contract at the specified place and time. Bear all risks and costs until the goods are delivered. Buyer's responsibilities are: pay for goods according to the commercial invoice of the shipment. Inform the seller about the time and place where the goods are ready to receive. Help the seller get the necessary documents for customs clearance. Receive goods at the place and time as the contract. Take all responsibility for the goods from the time of receipt. Buyers do not need to buy insurance. However, if the seller requires information necessary to procure insurance, it is at the buyer's risk and expense to provide such information to the seller. The seller bears all risks of loss of or damage to the goods in order to bring the goods to the named destination. DDP is used with all modes of transport. We have been told that the current Incoterms will change once every 10 years, and in each revision will be improvements to the terms based on the actual situation in the current year period. So what is the difference between the two most recent versions, Incoterms 2020 and Incoterms 2010? Let's find out. The first is change of responsibilities and obligations in CIF and CIP conditions. In Incoterms 2010, CIF cost, insurance and freight, and CIP carriage and insurance paid to require the seller to purchase a certain amount of insurance for the buyer equivalent to Term C under the insurance terms issued by the Insurers Association of London, and allows parties to negotiate with each other to be able to buy at a higher rate. In the Incoterms 2020 version, the CIF term will have the same insurance requirements, Term C, but the CIP term will be increased coverage to Term A and allow the parties to agree to purchase insurance in lower level. The second is the condition that DAT converts to DPU. DAT delivered at terminal will be replaced by DPU delivery at place unloaded. This means that the seller will be responsible for delivery and pass the risk on to the buyer once the goods have been unloaded to the means of transport at the named place of delivery. DPU is quite similar to DAP when it comes to adding unloading regulations. The third is add the onboard option to the FCA condition. When transporting goods under FCA terms, the buyer and seller can agree and require the presentation of the onboard bill of lading after the goods are loaded on board for payment with the bank. Fourth is about security requirements. As far as transportation security is concerned, as mandatory screening of containers is becoming more and more common, these costs are included in shipping charges. Incoterms 2010 covered responsibilities for security requirements and related costs, but the 2020 version makes these obligations even more noticeable. Finally, there is the issue of the seller-buyer using their own means of transport. The parties can use their own means of transport when agreeing on terms of FCA, DPU, DAP and DDP. Incoterm 2010 assumes that the carriage of the goods will be carried out by a third party. And it does not address the case where the seller or the buyer uses their own means of transport, such as trucks. However, the Incoterms 2020 version has clarified this issue. So have you ever wondered how companies use Incoterms in Vietnam? To answer this question, there is a mantra that certainly import-export companies in Vietnam often use: buy CIF, sell FOB. The reason for forming this mantra, as well as the habit of buying CIF and selling FOB of Vietnamese enterprises, has four main problems as follows. Firstly, Vietnamese enterprises do not understand correctly the provisions of Incoterms and believe that when exporting using FOB prices, they will quickly transfer risks to buyers, while importing at CIF or CFR prices will be safer because the seller will bear the risk as far as the port of import. In fact, we see that for all three conditions, FOB, CIF or CFR, the place of risk transfer is in the country of the person loading the goods. Second, due to the weak knowledge of Vietnamese enterprises about renting means of transport and buying insurance, foreign language proficiency is also an obstacle affecting the choice of delivery terms of customers. These businesses, many people do foreign trade but do not understand the transport business, so they are afraid to hire a ship to carry out goods or hire a ship to receive goods and often want to simplify by forwarding. The third is because the buying and selling of Vietnamese enterprises is often done through foreign intermediaries. Vietnamese companies are still too small and young compared to their counterparts in the world. Therefore, there is no weight on the negotiating table, so it cannot win the right to charter. Finally, because Vietnam's shipping companies are not strong enough compared to other shipping lines in the world, there will be numerous disadvantages at both the macro and micro levels with such a wide range of trade conditions. Due to low export prices but high import costs, the state will lose foreign currency revenue, preventing shipping lines and insurance businesses in Vietnam from increasing service sales. Due to high import costs, poor export prices, inactive enterprises with transportation, and problems in registering complaints, firms' ability to self-balance foreign currency is harmed. If there is a problem with a foreign shipping line or insurance, you can seek reimbursement. As a result, in order to improve this unfavorable situation, Vietnamese enterprises must improve their professional skills in import and export business as well as foreign languages, properly understand the delivery conditions specified in Incoterms, and improve superiority and power in business in order to gain the initiative in choosing favorable commercial conditions. At that time, firms should choose Group C conditions when exporting and vice versa, Group F conditions when importing, in order to sell at a higher price and buy at a cheaper price, while also creating conditions for increased economic activity for shipping lines and insurance businesses in Vietnam. At the end of this video, let's summarize some of the key points to remember. Plus, Incoterms are commercial practices, not mandatory. Only when the parties to the contract stipulate the use in the sale of mandatory. Only when a mandatory condition, binding the obligations and responsibilities of the parties to the contract. When used, it is necessary to specify which version of Incoterms is applied for comparison, to determine the responsibilities of the parties. Plus distinguish the responsibility of the buyer, the seller to where. Point of transfer of responsibilities, costs and risks from the seller to the buyer so that Incoterms can be selected in accordance with the position of the business. Plus Incoterm will be divided into 4 groups gradually increasing according to the level of costs and responsibilities of the seller. Group E, EXW, it is in the best interest of the seller and the buyer bears all costs and risks. Group F, FCA, FAS, FOB. The F Incoterms group affords buyers the freedom to control the supply chain for the arrival of shipments and then to send the shipments in stock. For sellers, they incur minimum liabilities using Incoterms Group E, essentially passing most of the obligations on to the buyer. Group C Incoterms often expose buyers to increased costs, because the seller is responsible for paying shipping and insurance costs. This is a disadvantage for the importer, especially if the exporter chooses to quote the final figure without specifying individual entries for variable costs, insurance and currency. Furthermore, buyers occupying inventory of expensive shipments may experience delays because Incoterms do not cover the transfer of title or title. This can be disappointing, because an inventory of expensive goods can help a business reduce costs and report higher income. Group D, beneficial for the buyer and the seller will bear all costs and risks. The video ends here. I have attached some exercises for you to practice below the description. In the next video, what topic do you want me to do next? Please comment below. If you find it interesting and useful, please give me one subscribe and one like.